Not even billionaire John Paulson, one of the best-known gold bulls, positioned himself to benefit from this year's gold rally. The hedge fund manager's firm cut its stake in the world's biggest gold exchange-traded product by 37% last quarter. Joining us today to comment on the matter is Kitco's Global Trading Director, Peter Hug. Peter, thanks for being back with us.
It's nice to be here again.
So, Peter, before we talk gold today, let's get your thoughts on Paulson. If he didn't catch the rally, what is an everyday investor supposed to do here?
Well, I almost made a tongue-in-cheek comment this morning in my commentary relative, this could be a contrarian signal, but in all fairness to Mr. Paulson, he liquidated his gold position in the fund, the 37% liquidation in December, when pretty much everyone was out calling for gold to drop to $1,000, and the Federal Reserve was going to come up with 4 aggressive rate hikes. So the environment looked fairly negative for gold. And my guess is that a lot of the investors in his funds basically threw in the towel and liquidated, and he had cash calls. And in that circumstance, he had no option but to sell and liquidate a portion of his gold position to meet his cash calls. I highly doubt that he's turned bearish. I think it was just a set of circumstances that created a situation where he needed to sell gold to raise cash to meet the redemptions.
All right, well, let's talk gold today. The metal seems to have steadied this Wednesday as equity markets have found a bid and oil prices stabilize here. It's obviously been a series of ups and downs here, Peter. What do you make of the volatility?
Well, gold's moved up $200 again. We stated in December when the Fed raises rates, that's the time to jump in. I'm still in the camp that believes that the Fed made a mistake in December and is highly unlikely to move higher with rates for the foreseeable future. We have issues in Europe with negative rates, Japan with negative rates, China slowing, the U.S. equity markets seesawing back and forth, and that has an impact on gold. Capital flight into gold when the markets are in meltdown, specifically the equity markets, and when oil starts to tank, you get capital flows into gold. Then you get a respite and you get an equity bounce, you get an oil bounce, and money moves out of gold. So you get a lot of choppy action. Overall, the fundamentals still suggest to me that you want to be long this market. But this, as I mentioned a number of times over the past month, this is not going to be a linear move. This is going to be a choppy progression. And every time there's an issue with the equity markets, oil or Europe or China, you're going to have capital flights into gold. So I think there's a floor on gold. I'm not in the camp that suggests, as some of the brokers out there, such as Morgan, suggest that gold is going to $1,000. I think we've seen the low. But this isn't going to be a glide path right up to $1,900 or $2,000 like we saw in 2008, 2011.
All right, Peter, and just quickly, I like what you wrote in your morning commentary on Kitco.com. You said if you're feeling good, sell gold. Is the euphoria misplaced? Let's talk about that.
Yeah, I'm not convinced. I don't believe that the equity markets have got sustainable legs. I still think that there's some serious headwinds to the equity markets. I'm still wanting to see what Draghi does in March. I mean, the Europeans are in negative yield. The Japanese are in negative yield. China certainly hasn't demonstrated a resumption of growth. So I think there's more headwinds and more risks to the economy than there are pluses. And in that scenario, I think you need to, for sure, hold a position in gold if you're a portfolio player that wants a percentage of their allocation in gold. And as a trader, you're going to get whipsawed, so you need to trade levels. You need to trade the technical levels. Overall, I think the fundamentals still remain for the market to move higher in the short term.
All right, thanks, Pete. Thanks for joining us.
You're welcome.
And thanks for watching this edition of Kitco's Gold Report. We have outspoken Bubba Horowitz up next from the CME.